In this lecture, we will go together through few examples to recap and apply all the concepts we covered in the previous lectures for this section. The first example. A contract between a customer and a supplier who owns a huge shopping mall, where the supplier grants the customer the right to use a specified space at the entrance of the mall, to put a stand for selling its goods. The customer has an exclusive use of that space. Also, the customer can decide what goods to be sold, when to sell them, and the quantity of goods to be held on the stand. The supplier only provides security and maintenance related to the space used by the customer. According to the terms of the contract, the supplier has the right to require the customer to relocate to another space in the mall without the customer's consent. The shopping mall has got many alternative spaces that can be used as substitute for the current space used by the customer. The customer's stand can be moved easily to any other space. There are ongoing renovations in the mall that will change the interior design of the mall, and will create some amusement park areas that are expected to increase the number of visitors to the mall. Assess whether that contract includes a lease. For the contract to include a lease, there should be an identified asset in the contract, and the customer should be able to control its use during the period of use. So, let us start with the assessment. First, there is an identified asset in the contract. The space to be used by the customer is explicitly identified in the contract. The space is specified, and its location is near the entrance of the mall. Second, the customer can control the use of the space throughout the period of use, because the two conditions for that were satisfied. The contract states that the customer has an exclusive right to use the space, which means that the customer is entitled to substantially all the economic benefits from the use of the space during the period of use, and that satisfies the first condition. The contract also mentioned that the customer can decide what goods to be sold, when to sell them, and the quantity of goods to be held on the stand. These decisions involve directing the use of the space during the period of use, because the customer can decide about how the space will be used, and for what purpose it will be used, and they are relevant decisions that affect the economic benefits to be derived from the use of the space. The supplier provides security and maintenance related to the space used by the customer, and these services do not grant the supplier any right to direct the use of the space, because they are irrelevant decisions, that do not affect the economic benefits to be derived from the space. Based on this, we can conclude that the customer can direct the use of the space throughout the period of use, and that satisfies the second condition. Up to this point, there is an identified asset in the contract, and the customer can control its use during the period of use, and therefore, the contract is supposed to be a lease contract. But in fact, that is not the case, because the supplier can substitute the space used by the customer with another one. According to the contract terms, the supplier can require the customer to relocate to another space in the mall, and that right is assessed at the inception date of the agreement to be a substantive substitution right, because the two conditions for that were satisfied. First, the supplier has the practical ability to substitute the space used by the customer, because the supplier has got a lot of alternative spaces that are available for substitution, and the customer cannot prevent the supplier from substituting the space. That is the first condition. Second, the supplier will benefit economically from the substitution. The benefits from the substitution exceed its costs. Costs of substitution for the supplier are very low, if any. The customer will just move the stand of goods to an alternative space inside the mall. On the other hand, the benefits from the substitution are high, as it will be easy for the supplier to manage the space as required, to complete the mall renovation, that when completed will boost the number of visitors to the mall. So, the second condition is also satisfied. The existence of these two conditions makes the supplier's substitution right substantive, which means that the space used by the customer can be replaced any time by the supplier during the period of use, making it difficult to have an identified asset throughout the period of use, and because of that, we can conclude that there is no lease in this contract. Let us see another example. A contract between a customer and a supplier, where the supplier granted the customer the right to use a floor in a building as a head office for the customer's business. The contract did not provide a description of the floor. However, the floor will be made available to the customer by the supplier once the contract is signed. The conditions of the contract gave the customer an exclusive use of the floor. The decisions about directing the use of the floor were predetermined in the contract, and the customer designed the floor in a way that predetermines its use during the period of use. Upon receipt of the floor, the customer paid heavily for the setup and decorations made to the office. The contract allowed the supplier to substitute the floor used by the customer for another floor in one of the other buildings owned by the supplier, any time through the period of use. However, the contract obligated the supplier to reimburse the customer for all the relocation and decorations costs, plus any remedies for damaged furniture and equipment during the relocation. Does the contract contain a lease? This contract includes a lease because of the following. There is an identified asset in the contract. The floor was implicitly identified in the contract, as the contract mentioned that the floor will be made available to the customer once the contract is signed. The customer can control the use of the identified floor. The contract states that the customer has an exclusive right to use the floor, which means that the customer is entitled to substantially all the economic benefits from the use of that floor during the period of use, and that satisfies the first condition. The decisions about directing the use of the contract are predetermined in the contract before the period of use, and the customer has designed the floor in a way that predetermines its use. Since there is an identified floor, where the customer can control its use during the period of use, then the contract is a lease contract. The supplier's substitution rights mentioned in the contract were assessed at the inception date not to be substantive, because one of the two conditions for that was not met. Although the supplier has the practical ability to substitute the floor, the supplier is not expected to benefit economically from the substitution, since the costs of substitution, which are the relocation and decoration costs, plus remedies that the supplier should pay to the customer are very high, that it is likely to exceed the benefits from the substitution, and thus the supplier's right to substitute the floor is not substantive. Therefore, we can conclude that the contract contains a lease. A third example. A contract between a customer and a supplier, where the supplier grants the customer the right to use the entire and only mezzanine floor in XYZ building, owned by the supplier. The customer has an exclusive right to use the mezzanine floor, and can decide how the mezzanine floor will be used, and for what purpose it will be used throughout the period of use. The supplier can require the customer to relocate to other mezzanine floors, in one of the supplier's other buildings that are exactly the same, but that substitution is only on the event of selling XYZ building to an investor. Does the contract contain a lease? There is a lease in this contract. First, there is an identified asset in the contract. The mezzanine floor is implicitly identified in the contract. It is just one mezzanine floor in the XYZ building that will be used by the customer. Second, the customer has the right to control the use of the mezzanine floor throughout the period of use. The contract mentioned that the customer has an exclusive right to use the floor, and therefore, the customer is entitled to substantially all the economic benefits derived from using the mezzanine floor. That satisfies the first condition. Also, the contract mentioned that the customer can decide how the mezzanine floor will be used, and for what purpose it will be used throughout the period of use. This means that the customer has the right to direct the use of the mezzanine floor throughout the period of use, and that is the second condition. Given that these two conditions are satisfied, then the customer can control the use of that mezzanine floor throughout the period of use. Up to this point, we can say that the contract is supposed to include a lease, but let us look at the supplier's substitution rights first, and see whether the two conditions for that were satisfied. The contract mentioned that the supplier can require the customer to relocate to other mezzanine floors in one of the supplier's other buildings, and that substitution is dependent on the occurrence of a specific future event, the sale of XYZ building. The standard states that, if the supplier can substitute the asset, only on, or after a particular date, or only upon the occurrence of a specified event, then the supplier does not have the practical ability to substitute the asset, because that ability should be present throughout the entire period of use to be considered a practical ability. So, in this example, the supplier's substitution right is dependent only on the occurrence of a future event, which is the sale of XYZ building, and for this reason, the supplier is considered not to have the practical ability to substitute the mezzanine floor. This is the first condition, not satisfied, which is enough to conclude that the supplier's substitution rights are not substantive. No need to examine the second condition. Based on that analysis, we can say that the contract includes a lease. Of course, it is almost impossible to cover all the situations that one might encounter in practical life, because of the diverse terms and conditions that can be included in a contract. Our examples here are not aimed to cover all these diverse situations, but are aimed only to show you how to apply the concepts you covered in this section. If you are looking for more examples, the IFRS Foundation has included illustrative examples with the IFRS 16 standard. So you can refer to these examples if you have access to them, and after understanding the concepts we covered in this section, you will find it easy for you to understand the IFRS 16 illustrative examples.